Hey everyone, Dan here. We are just before market close on Friday, July 9th. Today we're going to take an updated look at BlackBerry. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, if you share or consume stock information on any social site such as Facebook, Twitter, Reddit, other places, feel free to share this video there or any of my other videos there. I would appreciate that as well, as I am trying to grow the channel as time goes on. All right, so with BlackBerry today, we'll take a quick look at some data, but we're mostly going to be focused on the chart, and I'll explain why as we sort of get into it. But basically, this is the, let's call it, it's about a 2-month, month and a half, 2-month time frame since this run up here. And so tracking that run up on the fib retracement, we see it coming down and actually doing a really interesting job of treating all of these levels, or a bunch of these levels, as support and resistance zones. It first sold off and tried to bounce off the 618 and actually had a good jump up off of that, knocking its head on the 38.2, and then just consistently sold off, tried to catch itself around the 618 again, and now is struggling around the 78.6 retracement level. So getting closer and closer to fully retraced at the moment, but showing a little life now that it's hit this level. But we see that previously too, where when it hits levels for the first time, it often does start by showing some initial price strength. You see that here, and you see it here. So the first time build on these, is pretty common. You also see it here. And then, yay. And then, of course, where we are right now, first time coming down to hit this, and it's trying to bounce up off of it. So not uncommon as far as this one's going, but also it hasn't shown itself to be a great sign of recovery or anything like that. So that's sort of the concern that I would have. Additionally, beyond those retracement levels, you are kind of caught in this down channel. It's not super steep down, but it's definitely seems a bit, to me it seems like it's a bit more than just a consolidation zone. So this down channel here, it's knocking on the door of the upper bound of the channel right now, so potentially it could get some boost out of there. What you need to be careful of when that happens, actually, well, it was kind of in the channel at this point, but I'll just use this as an illustrative purpose, but this isn't me saying that this is what happened here. But what I'd be careful of is if it came up and out of the channel and then quickly came back down into it, oftentimes what we see is kind of what you saw here, but even to a more extreme degree. It tries to come up and out of the channel and then pretty quickly comes back down into it. And I would suspect that if we see that at this point, it's probably going to have a hard time not just falling through the lower bound of the channel because it's already tried to establish support around that 1137 level. And as we've seen, at these levels previously, that it's been struggling with for the last couple of months or so, once it has a hard time holding it, it doesn't really return and knock on the door a bunch of times. It kind of just falls right through. So the two concerns that I would have is if it breaks the channel to the upper bound and then comes back in, I would kind of be surprised if it doesn't just fall down definitely below $10 and sort of look to maybe exit out the bottom bound of this channel, which would be a pretty dramatic move down. But the flip side of that, of course, is it could break the upper bound of the channel and then continue up and try to test that 1354 level and see if it can get support over there. So that would be obviously the bullish case of things. But those are the two main things I'm looking for at this point, are these retracement levels, just because it's respected it so well all the way up and down, and then this down channel. On the indicator side of things, before we flip over the data, it's inching up, above the midpoint right now sitting at 56. So we'll see. It definitely has enough run room, in my opinion, to get itself up and out of this channel by pressing it toward or even into overbought territory. But the question there is then, what's the ramification of being overbought? Can it do something like it did here, where it ran into overbought several times and didn't ever dip down much lower than the midline and had several runs up, and then when it lost the midline, then it came down and struggled down into oversold. But if it can get a run over the midline here and make a run into overbought and then come back down and hold right around the midline and make another run up, then I think there's a really good chance of establishing support over that 1354 and at least leaving this down channel and trying to establish a different trend. On the MACD side of things, everything relatively flat. So this is the area in which, like, this looks like MACD consolidation zone, right? So that's why I said it's kind of, to me, looks like it's a bit more than consolidating. It does look like it is a move down. And all consolidations are generally slightly one direction or the other. To me, this is just more than the slight that I would be looking for in order to say that it's purely consolidating. So, but on the MACD end of things, it is taking a more consolidation type approach. There's a bunch of even histogram areas with bullish followed by bearish momentum. So just sort of like bobbing and weaving in and out. Now it is approaching the baseline of the MACD histogram. So question here is, it's obviously has a bullish cross at this point, and it's increasing the the space between the MACD and the signal line. Now, can it continue to widen that gap and really push up? But it definitely has the run room, very similarly to like we saw in the RSI. It has the run room because it's still sitting below the baseline, so it could easily push up and over. Like you see here, this got really high, nearly to 2 on the MACD. So that would give it a ton of potential, upwards momentum. So that's what I see on that side of things. Before we flip over to the data, let me just mention that in the description below, I have several links, but one of them is if you would like to receive a once or twice per week email from me. There's an email list down there where you can pop your email into a Google form. I'm not launching this until August, but I'll send out a note to anyone who's on the list before I launch it in August and say, hey, here's what it's going to be, here's what you can expect, and if you are no longer interested, here's how you could opt out. Obviously, it'll be supplemental info to the videos that I share, but also additional trade ideas that I could relatively quickly put into an email newsletter, but I don't have time to make videos on. I have an extensively long list of tickers that I would like to be making videos of, but just as I'm putting out, 3, 4, 5 videos a night, I just, even then I can't get through the list. So there's more to share than I have time to, but the newsletter will help with that. So check that out in the description below if you would like. All right, so a couple of things to look at with BlackBerry. One is obviously the sentiment. A lot of this run up that we see back here that we're tracking the retracement on right now was driven by sentiment on Wall Street bets, right? And we do see that it's kind of dwindling at the moment. BlackBerry is sitting actually behind Boeing over here, just ahead of Workhorse at the moment, just consuming a little over 2% of the comment volume. That said, relatively positive sentiment compared to the negative sentiment, but that's what you would expect in a stock that's sort of been taking a bit of a beating and now is having a bit of a couple of green days back to back. So I would be looking for that to really move left, move up the volume spectrum, and sort of reinfuse some of that interest from retail if it's going to truly make a big push up. On the other side of things, I have been talking about this for I think since the first BlackBerry video that I put out when there was a lot of speculation around short squeeze potential. I didn't see it back then. I still don't see it. To me, the short volume is very, very low. Shorts are generally staying, out of BlackBerry from what I can tell. I don't necessarily know what the initial hype was all about. Maybe there was a brief period of time where there was an outsized short interest on BlackBerry, but at this point, I don't see it. I also don't see anything from the most recent month of fails to deliver data indicating that there's, oversized leveraging there that could be leading to some bad activities such as naked short selling. I don't see that either. So I wouldn't rely, at least my personal opinion is I wouldn't rely on a short squeeze to provide anything. That said, I also wouldn't sort of fear the shorts driving this price down at the moment. I think there's just a lot of like unsettled questions around like, is this company actually worth, this double-digit stock price, or is it kind of a relic of the past, and there's not sort of really great growth potential ahead. And I know there's sort of some big changes coming up in BlackBerry, and there's a lot of videos and info that you can find on that, so I won't get deep into that in this video, but there is potential there, but obviously they have a lot of work to do if they're going to make that happen. But again, from the short side of things, this could change at any time. Obviously, shorts could suddenly pile into any stock, but at the moment, from what I see, I don't think that there's a bunch of shorts driving on the price, and I also don't think that there's short squeeze potential in the foreseeable future. All right, well, that will do it for this one. I hope you had a good trading week, and I wish you the best of luck no matter what you're trading in the week ahead. I hope you enjoy your weekend, and I will see you in the next video.